has been this ongoing debate about the tech race, China versus the United States. Now, as you're coming in to the city here, what are you seeing, what are you hearing, and what are your thoughts?
Sure. Well, I think it's going to be interesting, especially with Minimax IPO today. I mean, obviously, we've got to remember that every model we've ever seen from a US company, a Chinese company, has been trained on some variant of Hopper. And it's only in the middle of this year we'll see the first models trained on Blackwell. And obviously, that's something that the Chinese model makers will not have access to, and the rest of the world and the US will. So we should start seeing some divergence there. And I think as we move into Blackwell, into Rubin, and Rubin Ultra, obviously the power of that infrastructure gets much greater, and that advantage gets much greater, which should allow for a greater sort of divergence in terms of the capabilities of AI between China and the US, and that's obviously the stated foreign policy of the US. But I think as a result, Chinese AI will develop differently. It will just be democratized, it will be cheaper, it will be open source, and so just more people will get their hands on it at a cheaper price, and I think it will just proliferate a lot quicker. From an investment point of view, that makes it more challenging to invest, but we still see opportunities in select areas in China AI.
So do you think that with this open source, in terms of the uptake, that China could have more influence in the development of AI?
I think so, as long as those models stay on par or close to those US models. I do suspect, though, that we will start seeing a divergence as that superior US AI infrastructure starts iterating those models and starts making those models more capable over time in years to come. So I would expect from here we're probably at peak relative Chinese AI capability versus the US, rather than we're at the start of China overtaking the US.
Now, I want to play some sound. Just a moment, earlier this morning, sitting in the seat where you are now was Davide Serra from Algebris Investments. I'm going to play the sound and we'll talk on the back of this.
I can see there are bubble behaviors. The evidence so far out of all the companies that implemented it, let's call it machine learning more than actual artificial intelligence. Yeah. So they're out there telling they're going to create a new Leonardo da Vinci. Good luck. That's not going to happen. Yeah. Is it going to be an amazing improvement of machine learning? Yes. Will this be applied to productivity? Yes. Who do I think it will be the ultimate winner in application? China. Why? It's a country of engineers. US is a country of lawyers. And in the end, once you have a new technology, you need engineers to implement it.
So he was talking about the winner of applications. He says that China has engineers and US has lawyers. I want to get your take on, you can respond to what he had to say, and then also, we're watching the investment that's going into AI and the AI bubble. Do you expect it to pop?
So I just think AI will develop differently. I think in China you have that a chip limit. So there's just limits to what can be done. Now we'll see if H200s become available in China or not. But if you think about it, in 2 or 3 years' time, we're going to have models trained in the US with a chip that's going to be 400 times more powerful than a Hopper chip. I would expect that would mean that US models will be a lot more capable in 2 or 3 years' time. And then because the chips are limited in terms of being 7 nanometer, you're going to have a lot, we've seen so many chip startups, so many chip IPOs in China. There's going to be a lot of competition. On the cloud side, there's a huge amount of competition. So we think probably the way to make money in AI in China is more on the application side, more on the platform side. Companies like a Tencent that can take with their own AI, they can take it from DeepSeek, they can take it from Minimax, they can take it from multiple sources and integrate it into 1 billion users and the services they use every day. That's a great way to make money. I think in the rest of the world, it's going to go differently, and we're going to see different ways and different models. I do think that some of the new companies are given a hard time. I mean, I've been covering the internet companies for a long time, for 20 years. You got to remember, Google took from $10 billion of revenue to $100 billion. Took them 11 years. OpenAI is probably going to do that in 3 years. So I do think we're giving those companies a bit of a hard time that actually, they are monetizing, they are generating significant amount of revenue at scale, and companies like an Anthropic will probably be profitable next year. That gives us some confidence that some of the concerns around ROI and monetization are a bit overstated, and some of this capital spending is justified, and so can continue for longer.
We were watching CES and the announcements coming through. We heard from Jensen Huang. He was already talking about Vera Rubin. This is going to be on 3 nanometer technology. A moment ago, you were talking about 7 nanometers. That's the H200. Currently, the Blackwell architecture is 4 nanometer. So, we're moving along quite quickly. I think it's about a 6 to 9 month turnover when there's this data, or I should say, technology refresh. What if anything, came out to you from CES? What was some of the most important headlines that you were watching?
Yeah, so I think a couple of things. I mean, to your point, I think Jensen made the point that he's not just a chip company. When he thinks about a Vera Rubin rack, I mean, he's redesigned all the chips in that rack. I mean, he's making the point that we've never bought an iPhone or a PC where every single chip in that device has been designed from scratch. And that's what they're doing with the Vera Rubin rack. And then also the huge amount of networking and software and storage innovation that they're having to bring to deliver 10 times performance every year. That's way beyond what we had with Moore's Law. So that makes it tough for the competition to compete with that. And the other big takeaway was obviously he was talking about this ChatGPT moment for physical AI. So for robotics and humanoids, also for autonomous driving, we think we're at a real tipping point in terms of the applications for that, the intelligence of these humanoids or autonomous driving, and hence the rollout of that. Whether that be Waymo rolling out in 20 cities next year, what we're hearing from the Chinese companies in terms of proliferation of humanoids. This ultimately solves for a demographic problem. Everyone talks about AI taking jobs, but actually in China we've got a shrinking workforce. In many developed countries we've got more dependence and less workers. We need AI to be able to drive those taxis, to be able to work in those factories. And I think ultimately technology and AI delivers that solution.
XPeng, I was speaking to He Xiaopeng for the launch of their P7 Plus that's going global today at the Brussels Motor Show, and it's the Touring chip. This is an in-house designed chip that they're going to be putting across their ecosystem. So it's everything from their cars to their flying cars and their robots. What does this tell you about China's ability? And in terms of the stocks that you pick, the AI plays, where are you looking?
Yeah, so I still think on the infrastructure side, there's still, we think this is going to be more pervasive and bigger than people think, because, in my career, this is probably the most correlated to technology, to compute that we've ever seen. To have intelligence, to have reasoning model, to have agentic AI, to have physical AI, you just need more compute at every juncture. I think that's where, I think there's a misconception as to NVIDIA being a chip company. It's a full stack company. Jensen's always talked about, AI is a full stack problem that needs a full stack solution. And again, I think every company is going to have to come to bring something to bear, whether it be on the humanoid side, on the EV side, on the robotic side, as well as on the data center side. I think within infrastructure, yes, we've played compute for many years, but as we're seeing now with memory shortages, with shortages at TSMC, they're going to have to build a lot more capacity to deal with this, insane demand. So that's where, semiconductor equipment becomes a lot more interesting. And then to your point, China's trying to localize a lot of this. Now, I think without an EUV tool from ASML, that's quite hard. They're probably not going to have something like that for 5 or 10 years' time, but they're going to try and do as much as they can to not be reliant on the United States. That gives us some opportunities in those localization plays, but more on the equipment side, maybe on the chip companies, because there's just going to be so much competition.
Can you share with us, you've named a lot of names, we've talked about a lot of different concepts in this space. Portfolio construction, how would you build an investment in AI?
So I think, where's the money going to turn up? I mean, we all talk about bubbles and, is this sustainable? The thing that makes it sustainable is the fact that these companies are going to earn a lot more profits. Now, the problem is that everyone's buying something today that's going to benefit from AI at some point in the future, or may never benefit from AI, or there's so much competition. Where can you genuinely find companies that are going to make more money? And obviously, NVIDIA and some of those semi companies were the places to be in the last few years. Now we're seeing with memory, these companies making so much more. Record profits for Samsung, record profits for Micron. And then also, I think on the equipment side, we're going to move to a WFE number that we've not seen. We've been at 100 billion and change. We're going to maybe go to 150 billion plus in years to come, maybe even further. That should lead to some significant profits for them. And then for the cloud companies, we started seeing that acceleration in cloud businesses for AWS, for Alibaba, for Microsoft, for Google, and even for Oracle, even though people have been obviously much more cautious about that. That will continue this year. And then on the software side, everyone's just thrown the baby out with the bathwater. Now, I think there is genuine concerns around AI disruption, but every company in software got sold off, whether a data infrastructure company, a cybersecurity company, even Microsoft. So again, if you're selective, I think there are opportunities there as well, even if we're probably being a bit more cautious on the application software side still.
We're going to be hearing from TSMC later today. Their monthly sales numbers due out next week. It'll be their full year numbers, and we'll also get some guidance for the full year. In terms of your top conviction calls, are you able to name some names?
Yeah, so I mean, TSMC for us is, when we talk about GPU and TPU debate, or whether the Trainium's going to do well or this ASIC's going to do well, all made at TSMC, right? And so we do think that the market is underestimating the pervasiveness and the growth rates for that company, as well as their pricing power. I think even Jensen's gone on record as saying, well, maybe actually they should make higher margins, because obviously they're enabling everyone and they make lower margins than some of their customers. So we think that that's a great place to play, but also they're going to have to significantly increase their capital spending. They are completely full, and they're struggling to be able to meet the demand that they're seeing from the AI side. That means that again they're going to have semiconductor equipment companies, they're going to see meaningfully higher orders through this year into next year, and again that gives us some opportunities as well.